You're locked in to the Grain Market Talk podcast. Fast updates, market movers, and the grain news you need right now. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right. I've got Pat with us here today. How's it going, Pat?
Good, Mike. How are you?
We're doing really good. We are sitting here on a Friday afternoon. Oh, what a day. Holy cow. We've had a lot of things going on, Pat, a lot of volatility, whether it be the cattle market, which I'll have Nick talking about here in a little bit, or the grain markets. But the equities and crude oil, those outside markets really moved a lot today. So what can you tell me about your take on just what we saw in today's trade, let alone for the whole week here on the grain markets?
Yeah, I mean, as we move closer to our spring, and most of our clients are thinking about spring field work and trying to get the ball rolling in terms of making some progress here in terms of putting the crop in the ground. We've got these markets that are more than ever concerned about outside influences, right? And so, just looking here, I think we've got November soybeans down a couple cents compared to last Friday's close, and corn kind of the same thing, right? So we ended up in a spot that isn't entirely different than where we were when we had a chance to visit last Friday, Mike, but we certainly have had some volatility between now and then. And so, why don't you, if you don't mind, take a little stab at first what's going on as it relates to the latest iterations in the Middle East here, and what influence or impact that's had on crude oil, and therefore maybe corn and soybean oil to some extent.
Yeah, the week really progressed pretty quickly. You start the week off on Monday talking about ceasefires and ceasefires between Lebanon and Iran, and then all of a sudden we get towards the end of the week and things developed really quickly out of nowhere, it felt like, Pat. The Middle East, you saw I'll have Cade pull up a few of the articles here just about the daily news at least, but we had a situation where Trump had said or came out that they are opening up the Strait of Hormuz, and Iran came out and said they're opening up the Strait of Hormuz this morning, and said that the negotiations are very well along. They've negotiated almost all the bullet points, and they're almost all done. Even Iran said that, and both sides said they're very close to a deal. Things seem to be de-escalating quite a bit in that part of the world, whether it be a ceasefire on the war side or just logistics with Strait of Hormuz opening up as well. So going from 2 ships a day lately for tankers through the Strait of Hormuz, now back to a normal, at some point, 140-ish a day. So we'll see how fast that progresses. But nonetheless, through this week here, crude oil set back immensely, another $10 again today. So your front month's 84 instead of around 95, 105. So the crude oil market's gone down a lot. Meanwhile, corn was up 5 cents this week, week over week for December, like you mentioned. So a little disconnected, but everything seems disconnected today. Because even from an outside look, like the equities, S&P was up 100 points today, while cattle were down almost limit at one point today. We were trading a lot different things throughout some of these. So we're focusing on some different fundamentals, not so much of outside market influence here. And like soybeans and corn kind of finished green today, Pat. So kind of uncharacteristic trade lately. Nothing seems correlated with each other would be the way I put it here lately.
Right, and this story isn't over yet, right?
No.
I mean, I like as we are recording this podcast on Friday afternoon, I guess things have looked as good as they've looked for quite a while as it relates to what's going on in the Middle East today. But this isn't the end of that story by any stretch, and so we'll continue to likely have some volatility influenced by these outside market forces that'll continue to move our grain markets around here just a little bit for sure. As we start talking about internal fundamentals a little bit here, while us in the Northwest Corn Belt is experiencing the opportunity for a relatively open, quote unquote, last half April here for producers to plant at the pace they're comfortable with, say it that way, right? So, but there's a good chunk of Iowa today, right, Mike, that isn't able to turn a wheel, and we're having this conversation on the 17th of April, and so we're not going to act at all like this is a planning delay of any stretch of the imagination. But we certainly are kind of looking at next week as an optimum planting week for a good portion of the Corn Belt in order to maximize the yields and those sorts of things. And there certainly will be some areas that are unable to sort of execute on that for sure. And another round of rain forecasted for this weekend. And so again, just say it's too early to be talking about any of this to any large extent at all, but worth noting that we do have a pretty good portion of the Western Corn Belt, at least, that is going to be in a little bit of a tough spot here as it relates to hitting those optimum planting dates.
It seems like in the past, you've got to get past the May WASD report.
For sure.
Once you get past that, then all of a sudden you look at the 6 to 10 day forecast and it's like, progress is really pretty slow or fast. It seems like you need to get in the month of May, and then it seems like you've got the WASD report quickly come up, and then you get to talk about, okay, there's delays or fast pace, and it seems like that's when we talk about it. So yeah, it's still early, but I would argue with how obsessed the community's been in the past few years with early planting, especially soybeans, getting those in early versus normal, it seems like it's been pretty quiet around here. So I liked the way you said that, in the Western Corn Belt here, people are getting planted as fast as they want to be because we've got some cold temps tomorrow. It's been a little wet. Next week seems to open up a little bit, but then it's cold again next weekend.
Right.
So Iowa, a lot of folks, it sounds like, can't go through the majority of the state, just northwest part, really. And then if I've been talking to guys, eastern Minnesota, pretty wet, it's still there. Wisconsin's pretty behind. Then you go far extreme eastern Corn Belt like Ohio, things are starting to roll a little bit there too, it sounds like. So the majority, I would say, in the fringes, it seems like, are ironically getting going, but right in the heart of the Corn Belt, it's a little bit slower than I thought it maybe could have been, and that may be a story at some point, but we're about a month early, I think.
Yeah, we'll stay on top of it, and again, at this point, don't think that it's a real big deal.
But there is a trend developing. A few weeks ago, Pat, the U.S. corn production in a drought was in 46% type range. About half the corn production was in a drought. That was getting very red on the south and west portions of the United States. That's down to 26% is in a drought now for the United States. So going into our main growing season, it would appear that the I states, a good percentage of the Corn Belt, is starting off with actually decent soil profile, moisture profile, I would argue.
That's absolutely right. Net, we are in better shape today than what we were a month ago in terms of the potential for this crop. No question
Absolutely.
about it.
A few other things I wanted to mention as well. The wheat market. We don't talk about it a lot on this podcast, but it's seen an immense volatile streak here for the last month or so. It went way up. We gathered about $1.25 rally. We took about 70 cents of it back in the wheat market, and now we put another 60 some cents on this week. The dryness and cool weather over the south part of the plains in the United States has made that crop deteriorate condition scores pretty rapidly, and that could potentially play into maybe holding corn up or getting some fund buying in corn at some point as well. But that is a story weather-wise that will get to trade a little bit before corn or soybean weather, it looks like, in the United States.
Yeah, I think that's a great point. And if we want to kind of think about the U shape around the central part of the Corn Belt, the fringe areas, if there was some opportunity for reduced corn acres, it likely occurs in that spot, in those areas. Those would be areas that would be a little less inclined to have, fertilizer booked 6 months ago and those sorts of things. They need to keep their options open longer. If this dryness continues to persist in those areas of the Corn Belt, coupled with, a challenging start to the wheat crop, absolutely, that is the spot that you can start to show some or see some real concerns, at least as it relates to the corn balance sheet. And so, I think that's a good observation, a great point, and something that certainly bears watching here in the middle of April.
Part of this week's rally there had to do with this weekend getting a little bit cold too. So we'll watch freeze concerns through the weekend here. And then today it got pushed down a little bit because it's been a very easy way to hedge against inflation historically. So we've had some buying with crude oil going up here lately in the wheat market. And today, obviously, significant setback in the crude probably put a little pressure on the grains. But I thought the grains closed pretty well today. They bounced back well. And they weren't the only ones either. Like cattle came all the way back today after trading significantly off on levels. The S&P was well up and is kind of backing off through the day. So a little bit more calm going into the weekend than maybe the middle of the trading session today. But nonetheless, very, very volatile through these markets going into the weekend, Pat.
Yeah, absolutely. And I think, as we look out into next week and beyond, we should be preparing ourselves for increased, I'll say improved volatility, should create some better opportunities than what we've recently experienced for both our row crop producers and our end users. And so would just remind everyone again the importance of thinking and executing on placing working orders here. We're going to get busier as we get into spring and all of those things, and quite important, right? To take all the things that we sort of talked about all winter long in terms of a plan and make sure that we have an opportunity to execute those as volatility is likely to increase as we go into the latter part of April and into May here.
For sure. A few focus points and action points I'm working on right now as we head towards the end of the week to keep an eye on. The soybean market still holding in pretty well. We're above 11.56. We're within 20 cents of our high still there. So that one's a major focus point for me still as we start to kind of get that crop in the ground. The corn market, I'm concerned about or focused on basis. We've seen a little improvement on old crop basis on corn and soybeans in the Western Corn Belt. Maybe something needs to be done there here before we get a second harvest type situation after planning's done. And then the wheat market, obviously, with the rally we've seen there, some opportunities in all of those. So those are a few of the grain action items I've been keeping an eye on. The meal market, I know we talked about it last week a little bit. That one hit a pretty strong rally and then kind of stabled off at the top of that trading range lately, too, for the end users listening today, Pat. But any other final thoughts?
No, I, again, appreciate everyone taking the time to listen to our podcast. If you got any questions, please give us a call.
For sure. All right. Thank you for everyone for tuning in today. Reminder, just click the link in the description below to sign up for our daily market commentary, get some fast insights into the ag market and so much more. Also, check out our website at professionalagmarketing.com.